In today's video, I want to talk about the dollar, I want to take a look at gold, and I want to talk about the reaction to Nvidia's earnings yesterday. So hopefully I can get you set up for the rest of this week. Let's jump in. Welcome back to the channel, guys. As we get started, I just want to ask, if you're new here, make sure you are subscribed to the channel and hit the thumbs up button. That's all I ask for these videos. Got a good one for you, so stick around to the very end. So I wanted to actually start off where I have not been starting off as much recently, which is on the currency front for just a moment. The euro dollar is seeing a little bit of a pullback here. We're seeing a little bit of a corrective move, and this is piquing my interest. I am potentially looking to maybe take a stab on the long side around this previous level of resistance and this nice explosive candlestick move. You know, we had like 3 bars up, a little bit of a correction, jumped up here, and now seeing the pullback. I actually really like this level at 1.1040, and I do continue to have a bearish outlook on the dollar, but have been waiting for some pullback plays to get involved. And this one actually looks like it might be worth my first attempt. Now when I say first attempt, my thought process here is that oftentimes I will take more than one entry in order to try and get the trade. If this works out, then great, I'll trail stops and try and make it into a bigger trade. And if this does not work out, then I'll probably try again somewhere around the 61.8% retracement level on the euro dollar. So that is my game plan. But let's talk more importantly, not just pretty technical charts, but why the euro dollar? Why am I interested in putting my money on the line on the long side? Now, again, this is not financial advice ever, so I'm not telling you to go do this. This is just personally what I'm looking to do. And when a setup like this happens, I always consult what's happening on the edge finder front. And we can see that the edge finder has actually a bullish rating for the euro dollar. And I want to show you specifically, why that is. So if we take a look at the commitment of traders data for just a moment, right? The commitment of traders data for gold and for the euro and for the pound, what you'll notice is that for these three, which are kind of my focus for today's video, they're all favoring going long based on what the institutional money is out there doing. And I'll show you that just to add some context. If we take a look at positioning, GBP, gold, and partially euro all show some high levels of institutional long positioning, especially gold, by the way. But notably, not only that, this is the long-term positioning. This is the overall long versus short contracts traded by the non-commercials, which are your hedge funds and large speculators and banks, etc., in the commitment of traders data. So we can see that there's a big heavy preference for gold longs, pound longs, euro longs, slightly 58%. It's not super convincing, but more important than this first section, I want to talk about the second section that we've built here. On our tool, we have what is called the latest weekly COT filing section. And the reason that this is my preferred way of reading the COT report is because this shows you a very long-term outlook, because this doesn't change that much. If you watch this week to week, things like this are changing, marginally each week. Maybe they're going up a little bit, maybe they're going up a little bit more, but mostly they don't change that much. But what does change is the actual buys and sells week to week. And when we take a look at the euro, for example, we can see that on the latest filing, we saw a pretty nice change in long contracts. They added lots of longs and they decreased plenty of shorts, meaning they short covered on the euro. So that's very interesting to me. We can also take a look at GBP and see that it's something similar, a huge increase in long contracts traded and a slight increase in short contracts traded. And then we can take a look at gold, for example, huge increase in longs, small increase in shorts. And this gives us an idea of what on a week-to-week basis institutional money flows are looking like. Are they buying gold? Are they selling euro? Are they buying pound? Whatever. And so I like to keep an eye on this. So when we go to the top setups page, this is also being factored into our calculation as to the overall score for each one of our favorite, currency pairs, commodities, indices, etc. So with the confirmation that the euro is looking mostly bullish here on the edge finders list of signals, as well as the pound USD, what I can then go look for is I can look for technical entries entries with that confirmation. And so for me, I really like the 38.2% as a possible attempt to get long, perhaps a stop loss below structure. Same thing with the 61.8% retracement. And before I move on to our next chart, I just wanted to mention that the Edge Finder, which I just discussed, is currently 35% off for viewers of my channel. If you'd like to get access to the Edge Finder, the 35% off discount information can be accessed by clicking the first link in the description down below, and you'll be connected to a member of my team who can get you information about that discount, but also, more importantly, answer any questions you might have about the Edge Finder. If you'd like to pay with crypto, or you'd like to hear about installment plans that we offer, or you'd like to just get the information about the discount, speak with a team member of mine on our staff using the first link in the description down below. Again, the reason we do that is so that people who are wondering about our tool, I know that it can be a lot to look at first, especially if you're newer to the videos, but we have several people on our staff that can assist you with answering any questions about how the software functions and whether or not it might be a right fit for you in your trading. So again, get 35% off using the first link in the description by chatting with a member of my team. The next chart that I mentioned was the pound against the US dollar. And if we pull this one up, this one's a little bit further away from an entry point for me, but I am watching for a possible pullback to this 38.2% retracement level, the 1.3035 level. And I also like the, right around the 1.3 level as well. So I think you do have some support in this general area if we get a pullback into it. But that's a big if, because you're talking about from here, another, let's call it 150 pips lower, which could happen, but it also could, continue to march higher without us, which would be fine. I try and just stay on the sidelines until the trade comes to me. And if it doesn't, then it is what it is, and we move on. Now, I also mentioned gold, and this is a trade that I'm already in myself. So I'm currently long GLD, which is an ETF that tracks the price of gold. Because I'm in the US and my limitations are there for things that I can or can't trade. For non-US traders, you may not relate to this, but for us in the US, we can't trade things like CFDs, which are, NAS 100, XAU, USD. We can't trade CFD versions of those actual products like the NASDAQ or gold, but we can trade ETFs like GLD, or we can trade futures contracts like, gold futures. You can do that sort of approach. For US traders who are looking for that information, if you'd like to use the same broker that I do, the link is in the description. And if you're not in the US, some countries can still use Webull, which again is linked below, but we also have some other ones linked down there that are great for non-US traders. So check out those links in the description. They also have some special sign-up perks available. And anyways, back to this gold trade. I wish I had more trades like this, guys. I'm speaking very honestly with you right now. I could just chalk this up as like, oh yeah, sniper entry. That's what I always do. But usually my entries are not that good. And oftentimes I have to try more than once to get the right entry going. But what we do see is that the trend here continues to be to the upside. And if we take a look, we go back to the spot price here for a moment of gold here, what we're seeing here is potentially a higher low forming. My next game plan or my next move on gold here would be if we can clear through the highs and close above this white line decisively. Like if we see something like this, maybe today, tomorrow, the next week, then I can trail my stop. And I want to make a point here because I actually talked about it on the live stream. So maybe I'll refer back to what I said in the live stream about waiting for a properly defined high or low. So check out that section of the live stream right now. We got gold holding its own. I love to see this higher low forming in gold. I'm kind of trying to figure out what I want to do with this position. I've been in gold for 1, 2, 3, 4, 5, 6 days. We're in a nice profit on this one, but I'd love to see if we can clear the highs here and make a move. So GDP score is not going to change because the previous GDP number beat estimation. So we already have a -1 on the GDP column. So the gold score won't change off of that. And while that's not particularly bullish for gold, there's enough here that I still remain bullish on gold. Let's break this down just for a quick second on how the algorithm is determining that gold is more bullish than bearish when looking at the economic data, the technical reads, and sentiment. Well, first of all, the commitment of traders data shows us that institutional money is very long gold. And if you want to see that, if you don't believe me, let's pull up the commitment of traders report and we can get an idea of where institutional money is long and where they are short. So take a look at this. The net positioning tool right here shows you that of all of the symbols that we track, gold is actually the most long 85%, let's call it, of contracts traded by the non-commercial COT report, which is the hedge funds and banks and speculators in the market. They're very long on gold. They have huge positioning on the bullish side of gold. So keep that in mind for a moment. I mean, so right off the bat, institutional money leans heavily in favor of gold longs. And they have been for a while. They've made a lot of money. If you followed institutional money for the last, few years, you'll know that they've had a really big positioning on gold. Do you know how much gold is up this year? Yeah, maybe it's down on the morning. Gold's up like 20 plus percent. I think it's like 22% year to date. Gold is up like 22% year to date. And who is buying? Go figure. It's the big players. The big players are super bullish on gold. And you might say, well, Nick, doesn't that mean that it's going to reverse soon because it's already made a big move? Well, no, that does not have any bearing on whether or not it's going to reverse. Because a lot of times when you look at gold historically, watch this, I'll blow your mind. Let's go to a 12-month chart. I bet none of you thought, I didn't think I was going to be looking at a 12-month chart either. Look at this. When gold gets going, it gets going. And I think that we're in a cycle here. The long story short is just because something has gone up a lot does not mean whatsoever that it can't continue to go up dramatically. And the fundamentals for gold for me are still very intact. You have a Fed that wants to cut rates. You have a global central bank list that want to cut rates. The story still very much favors gold upside, in my view. Now, again, at some point, things will change. At some point, there will be a huge bear market for gold. But right now, I don't see that forming. When it forms, we adjust. I get a lot of support on this stuff, and we really do appreciate it. The vast majority of the comments on our content here are very positive. Every once in a while, I get the negatives, but that's just social media for you. But the vast majority is very positive, and anybody who, I always make this point or try to make this point as frequently as I can, the trading community is absolutely not toxic if you're in the right circles. So I challenge you, here's your homework for today's live stream. Go browse around Twitter and the more controversial figures of YouTube in the trading space, maybe the influencer traders or and what you'll notice is that you can very quickly find the toxic circles within trading. You can go spend your time having a Twitter battle with some random on the internet, and you can find the negativity if you want to find it. But I got to say, we have some of the most genuinely wholesome community members that watch these streams and videos and comment on them. And I imagine that I know that there's a lot of, circles that are more on the toxic side, but my guess is that if you're a regular viewer and you stick around here, let me make a guess about you. Maybe I'm right, maybe I'm wrong. You're not here to get rich quick. You're not here to get a Lambo lifestyle. You're here to better your family's situation. You're here to put in the work, and you've accepted that. You've accepted that this stuff is hard. You're here to, at first, maybe just supplement part of your income. Maybe you're just a hobbyist and you just really like this stuff and you want to learn about this stuff and you like demos and demo trading and you like back testing. Not everybody here is so cutthroat about this trading thing that I've got to make it in a year. Or anybody did I guess you right? If I guessed you right, type yes. If you're somebody who's just, I'm here to be a practical trader. I'm not here to gamble. I'm not here to mess around. I'm not here to mess around with the toxicity. If that's you, type yes in the chat. I'm just curious. I have a feeling that you relate. That's me for sure. That's where I started. And I can tell you that if that's you, you're on the right path because you're not messing around, not gambling, not getting in heated comments on the YouTubes and all that stuff. I mean, come on. I know where we're really here. Most of us, the reason is because we're here for the right reasons. And I think that that's why, we probably do have some really long-term viewers. We have some long-term viewers because we're not we do have a lot of people inevitably who are here for the wrong reasons for a little bit and then they leave, right? People who want to just make quick money, they realize this stuff's really hard and then they say, actually I'm out. But there's a lot of you who are here for the right reasons. And I just want to say, shout out to you. That's awesome. If you're looking for a better brokerage, then stick around for a second. I'm going to tell you how you can get some free sign-up perks with great brokerages all around the world. Whether you trade FX or indices, commodities, futures, all of the above, I'm going to show you a really cool way that you can get free sign-up perks with your new account. So if you're interested in switching into a different brokerage, you can get things like deposit bonuses or free stock shares, or you can even get access to some of our products for completely free. All you have to do to find out current perks being offered to new depositors is go to a1trading.com/brokers. That's a1trading.com/brokers. And as you look at that page, you'll see all these different offerings that we've currently locked down for you guys as subscribers, as viewers. Now, of course, we get something out of this. If you choose to use these links, you'll be supporting our page. But in return for the viewers, we've got great sign-up perks available for you guys so that you get some free game just by signing up for a brokerage if you're looking to do so. So check it out on our website. You can find current deals at a1trading.com/brokers. Thanks for watching this video, and on the screen right now you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.